Hey folks, Bob Desmond here at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. It is December the 3rd. Before we get into the charts, which are awesome, I have some really good charts, really good setups going into the new trading week, so stick around. I want to first express gratitude. Thank you for those who subscribed to my channel. We have a goal of reaching 1,000 subscribers by December the 31st of this year. So if you're not currently subscribed to my YouTube channel, please subscribe, leave a comment below, because 2018 is going to be the year of YouTube. I plan on putting out a lot of great content, so please subscribe to my channel and don't miss out on any of my videos. If you're watching this on either StockTwits, Twitter, which are also great mediums as well, follow me there, leave a comment, and if you are watching this on the website, enter your email address and we will send you out these videos each week so you do not miss them. So let's begin with our trades last week. How did we do? We did pretty good. Let's get to it. All right, let's begin with one of my trades from last week. I discussed it on Best Stock Charts last week. I'll link to it. You can go back, hear what I had to say about TV. And before I get into these charts, I am going to go to the comments section. If you're coming to this video by StockTwits or Twitter and you want to know where the symbol you're interested in is located on this video, go to the comments section. I have listed in order all of the stocks I'm going to go over, so it'll help you along and make it a little bit more organized for you. So I hope that helps. So let's get back to our trade from last week. TV, Grupo Televisa. This was an extreme oversold stock, and I talked about it having RSI of around 13 at that time. I think it went down as low of 11 on RSI, and then we began accumulating a position. How did we know where to buy in this nightmare of a sell-off? How do we know it was the bottom? Because that's exactly where we bought. Simple. What we did is we didn't use a daily chart. We didn't use a weekly chart. We used a monthly chart. Right here, monthly chart. And you could see that we knew well in advance where there were buyers. I discussed this with members on the week ahead commentary. We went into the week locked and loaded, knowing exactly where to put our buy orders. Right down here at historical support. Did it overshoot a little bit? Yes, it did. Did I get in at the exact rock bottom? No, but I got pretty darn close because I knew I did my homework. And members and I discussed this in great detail. We knew that this support level was support back in 2011. Prior to that, in 2010. Prior to that, in 2009. And prior to that, in 2008. So we knew that there were buyers there. That was where the probability of the shares rallying off of was most likely. So that's what we try to do. Stay away from just using daily charts, and God forbid you're using intraday charts to time your buy on a stock in a sell-off like this. You're going to go bankrupt. Now, the other trade that we put on and took off and put on again was Nektar Therapeutics. We shorted book profits right here on the 27th. The shares then subsequently rallied. We reshorted. Why? It's because we know exactly where there is historical resistance. Does it guarantee you a profit? No, but it raises the odds of profitability dramatically. RSI at current is 88.45. Members will discuss this one more on the week ahead commentary. Let's talk about charts that we've already spoken about in the past and that we're still watching for the future. Also some new setups. HLV, we discussed this one last week. Weekly chart, we broke out. Last week, I'm expecting a pullback. We'll look to get long of HLV. The path of least resistance is certainly higher with rising volume, institutional accumulation. This is what you want to see. I'm only going to go over the weekly charts. Members, I'm going to segment out my favorite charts, and then we'll drill down to the daily charts, intraday charts if necessary, and we'll discuss our strategy for getting long or short, whatever the case may be. EWC, iShares Canada, a rough week last week for the resource plays. I still like them. We reversed off the lows of the week. No breakout yet. It remains a watch. AMTD, a new one. TD Ameritrade, of which I use. One of my brokers. Weekly chart. We broke out on a weekly basis. RSI rising. Stokes are rising. Volume, again, institutional demand. Very critical. So the chart is looking really good on a weekly basis. Now, would I go buying on Monday morning? No, not yet. We need to wait for the proper setup. That's when you use your daily and intraday charts. Members, will talk more about TD Ameritrade. The next chart up, Facebook, weekly chart. We broke out the week of October 23rd. And we consolidated, which is fine. It's a validation of the breakout. We retested, all good. But you saw some topping action. Every time it tried to break out, it failed. There was some distribution going on. And the fact that the NASDAQ and the triple Qs was so extended, I was kind of reluctant to put on a trade of Facebook. And the intuition that I had actually panned out because we broke down last week. We had a bearish key reversal on the week. Now, let's drill in here. You can see that at one point in time during the week, we were actually below this breakout point. We did manage to rally back and close above this support level last week. Had it closed back down in this trading range, that would have been a breakout point failure and a very bearish event. So while I'm not willing to say short Facebook right now, there is a caution flag on the track. Does that mean by this time next week, I wouldn't be saying buy Facebook? It all depends, right, about what the charts have to say. So Facebook is a watch at current. I like the chart, but if we break down below last week's lows, and especially if we close down below this lower band of support, Facebook could be a short. So just a watch right now. I'm not saying go short it on Monday morning or, for that matter, to go buy it. We are seeing a breakdown on RSI. Stokes are rolling over. Volume was high, so we had distribution last week. So the chart is concerning. Members will talk more about Facebook on a daily and intraday basis. Tech data, weekly chart. We spoke about this bull flag formation. We expected a breakout. We got the breakout. A big move last week. It was up substantially last week, but it pulled back off the highs of the week. But it still closed up over 5.5%. Would I go buying it? No. What you're seeing here is overhead supply in action, right? So the shares broke out, hit resistance, and buyers back here who wanted to get made whole, they sold. Does that mean that we won't get through it at some point in time? No. Resistance levels at some point in time will be pierced. We just need to get rid of those who bought back here, now distributing into this new round of buyers. So this topping tail here, wick, shadow, whatever you want to call it, implies that you have distribution. The weekly chart still looks good though. Breakout on RSI, breakout on Stokes, all good stuff. Volume outstanding. Members will keep an eye on this one, but not right now. We don't want to buy it quite yet. We'll wait for that daily setup. More to come on tech data. HK, we've spoken about this one quite a bit. We were in a consolidation range. Guess what? Last week we broke out right here. Good stuff. Rising RSI. Volume was outstanding. Rising ultimate oscillator. What's not to like here? Members, this is one of our top picks for the next coming week and weeks. So more to come on the week ahead commentary. We're going to go into greater detail on HK guaranteed. Google, similar to Facebook, but worse. The fact that we had a bearish reversal week, not good. If we get a continuation breakdown next week, we'll be looking to short Google vis-a-vis put options. Probably a bear put spread. In essence, what that does, it hedges your risk if you're buying put options, and it helps finance the cost of that option. It brings down the basis cost. It reduces your upside potential, but you're hedged. It's a good thing. So more to come on Google, but we're looking to short Google. Note the lower highs in RSI. We've talked about this over and over again. RSI is not just a validator of a breakout. It also is very useful for showing divergences, bearish divergences, bullish divergences. In this case here, a bearish divergence vis-a-vis a lower high. And now a double top. Stokes are rolling over. Google's not looking good. And I apologize, folks. I have a bad cold. So if I sound garbled, I apologize. I'm working through it. More to come on Google members. The next chart up is Darden Restaurants, DRI. We had a breakout last week on the weekly chart. Love the chart. Am I ready to buy it right now? No. We need to wait for the proper setup. We've had a nice run. It was up almost 6% last week alone. We don't want to trade on emotion. We want to wait for the shares to pull back, consolidate, validate that this breakout is for real, which I believe it is, and then enter. Because remember, if you go chasing the shares where they closed on Friday afternoon, remember this, and you can go back to the chart I just went over regarding tech data. Remember your overhead supply, resistance above. Don't ignore these guys. All right, we're not that far away from these guys looking to get made whole again. They want their money back, so that's going to act as a ceiling on the shares. More to come. On Darden, I love this setup here. Volume could have been a bit better. The restaurant stocks did really well last week. Consumer discretionary did well. A number of them made it onto my screen are Starbucks, Sonic restaurants. DRI was my favorite of the bunch, so DRI is our restaurant stock of the week. The next chart up is LABU, a bullish key reversal last week, and we closed back above resistance, now support. All good stuff. So what you're seeing here, I believe in the market, is a rotation out of tech. I just went over Facebook. It was weak. Not it's really tech, but it's internet. You saw weakness in Google. Triple Qs, weak. Tech, weak. What was strong? The banks. Healthcare. Consumer discretionary. Consumer staples did well as well. So that's where you're seeing money rotate into. So LABU, looking good. We've traded LABU before. I know how it trades. We've made money on it before. We plan on doing it again. Members, more to come. LABU, definitely. It's going to be on our short list. Kansas City Southern. We spoke about this one last week. We expected a breakout. We got the breakout. I mentioned that we had a double bottom setup at the 50 level. We saw it hold and then break out last week on stochastic. RSI, it broke out. So here we have the neckline, a 45-degree neckline. A lot of people think that it has to be a horizontal neckline. No, it doesn't have to be a horizontal neckline. It can be diagonal, 45 degrees. Here you have it. And we broke out. We've had not just one inverted head and shoulder setup. And if I left out inverted earlier, I meant inverted head and shoulder setup, not just head and shoulder setup. We've had not just one, but two. Right here, left shoulder, head, the head will remain the same. Right shoulder, neckline, it's not here, but you can imagine. And we broke out of that, leading to this beautiful rally. Here's another one, left shoulder, right shoulder, obviously the head. And here's your breakout last week, all good stuff. So this is another one. It's going to make it onto our watch list. It's performing well. Those are the stocks we want to pay attention to. The next chart up is Endocyte Inc., symbol ECYT. This is a continuation breakout trade on a weekly basis. You could see that several weeks ago, we broke out, huge move higher, and then we consolidated. I think that we're breaking out fairly soon. So this is another one that makes it onto our short list that I'll be discussing with members on the week ahead commentary, the daily and intraday chart. How do we want to play this one? It's certainly going to be as a long, definitely not a short. We have a beautiful double bottom setup on RSI, potential breakout. Volume last week was a bit low, so that's a bit of a concern. So we want to enter this one as we do with all trades, gradually. We want to build a position. We want to keep that opening position small. We'll scratch the itch. Everybody gets that feeling, that emotion, that they have to go buying right away, right? Don't. Fight that emotion. You want to build a position. That way you could sleep at night. Scratch the itch. You're in the trade. Then as it begins to perform, then you add to that position. Not until the trade is validated do you want to go buying more. And never go averaging down a losing trade, okay? Please. So ECYT, a long trade for the coming week. The next stock up is Ruth Chris Steakhouse. Darden was my restaurant stock of the week, but I am watching Ruth's Chris because it actually did break out last week, but you saw some sellers move in already, and they took it off the highs of the week. I think that's going to continue. So we did break out, all good stuff, but the buyer's back here who got hit. The buyer's back here who got hit. They want out, right? They just want to get made whole. They don't want to make a profit. They want their money back. It's like it's a return at a store, you know? They just want their money back. So the breakout's for real. I think we're going to retest the breakout point. Therein lies your opportunity. Wait for the opportunity to present itself. Don't fall victim of overhead supply. Volume, outstanding. Rising sequentially, good stuff. Ruth Chris is looking really nice. So not necessarily on my short list, but certainly one to watch. And I think we'll be talking more about Ruth Chris. Chevron, CVX. This one actually came to my attention by one of our members, and he asked me to do it as a gold member, asking me to do it as a member stock chart request. It's a service I provide where I review the symbols for members that they submit for me to review. Anyway, CVX is in an uptrend. We had an inverted head and shoulders setup. Left shoulder, head, right shoulder. Very similar to KSU. I discussed it earlier in this video. 2 inverted head and shoulder setups. 1, 2, left shoulder, head, right shoulder. Here's your imaginary neckline here, horizontal. Here's another one. Left shoulder, head, right shoulder. We broke out above the neckline last week. Good stuff. So Chevron, I think, is moving higher. You did see some sellers move in. They took it off the highs of the week. Watch the price of oil. It does play a factor in how Chevron trades. Members, more to come. Chevron is one of our top energy picks. The next chart up is Autoliv Inc., ALV, the symbol. This is a new one. Made it onto our watch list today. The shares are in the part replacement business for automobiles. It's a late cycle cyclical play and very volatile, but a good cyclical. Now, the reason why these are late stage is because as the economy begins to soften up, people don't buy new cars. What they do is they keep the old cars and they have to repair them, right? So it makes sense. So stocks like Advanced Auto Parts, they do well. So ALV on a weekly basis, you could see that we were in a consolidation and we did break out last week. We have rising RSI, which is validating the breakout. Good stuff. The last thing you want to see on a breakout is RSI dropping. Stokes are rising. Good stuff. Volume is light. Okay, so volume matters, right? Because what does it imply? Well, I grew an appreciation for volume because I read all the books that William J. O'Neill has ever written. William J. O'Neill is the founder of Investors Business Daily, a great publication. Everyone should get that, at least the weekend edition, or as they call it, the Monday edition. It's really, really good, and it's about $5. Well worth the read every week. So, as William J. O'Neill always says, the volume bars imply institutional interest in the stock, right? So if you have huge volume bars like you saw here, that shows you that Goldman Sachs, Fidelity, they're buying up the shares. And you want to follow that money, and it makes sense. Last week, volume was a little bit light, but it rose sequentially, so I'll give it a break. The fact that we broke out on light volume is a concern. So I'm going to need to do a little bit more research on a daily and intraday charts for ALV before I got involved. But you can't ignore this breakout. It's fantastic. I just wish that volume was a bit better. More to come here. I think that we're probably going to be involved, or at least talking about ALV for a while. I like the setup here. Really good stuff. SunTrust Banks. All right, so I'm looking at Goldman Sachs, SunTrust Bank, maybe a couple of other ones. If you believe that interest rates are moving higher, you need exposure to the banks. I'm not necessarily in that camp. I'm not sold on it yet because you saw yields break down last week, and I'm going to go over that with members in the week ahead commentary about the macroeconomic picture as we proceed into the coming week and how we're going to trade it, especially in lieu of the tax bill that was signed by the Senate. I'm going to make a video on that this coming week, and I'll go over it. I'll post it on YouTube on Contrarian Chat on Wednesday. So if you want that video, either enter your email address on the website or subscribe to my YouTube channel, either one or both. So SunTrust, what it did last week, it broke out an RSI. It broke out on price. Good stuff. Do you need to go running it on Monday? No. Wait for a better entry point. And I'll go over that with members, either Goldman Sachs or SunTrust. I doubt both. I want to be a little bit more diversified than having two banks. So I'll pick one. How is our volume? Outstanding volume last week. SunTrust looking really good. The next chart up, another energy stock, Chesapeake Energy. This is more of a recovery play. A beautiful long-term downtrend channel, but it appears as though we're ready to break out of this channel. Volume is light. We'll wait for the breakout, but you already have a breakout and a retest of the breakout point on Ultimate Oscillator. You can see here we broke out right here the week of September the 18th. We retested not once but twice. Here the week of the 16th of October, and then again the week of October 30th. And we have now broken out. We're putting in higher highs. Good stuff. That's what you want to say. So no breakout yet on price. We're not ready to buy it. RSI has broken out. So Chesapeake looking good. We'll wait for the breakout. I'm expecting one. I think we'll get it. I think energy is going to be one of the big plays for 2018. And in fact, I'm going to be doing the 2018 year ahead forecast in the next week or so. So again, subscribe to my channel or follow me on Stock, Twitch, Twitter, enter your email address, etc. All right, let's get to the next chart, Ovis Sciences Inc. We don't have a breakout yet on price. However, we do have one on RSI. So we have an indicator leading price performance. Good stuff. Many times you get a price follow through. And you can see that last week we broke out higher highs on RSI. No breakout yet on Stokes. We are in a triangle formation, very close to a breakout. We closed above the 50-period moving average, which is now flattening out. Still declining though, but flattening out. Good stuff. And that's the first time we've closed above the 50-period moving average on a weekly chart since September of 2016, a long time ago. Volume, outstanding last week. Really good stuff. A breakout on Williams percentage jar. So the chart's looking good. This is one that's probably going to be on our short list of trades for the coming week and weeks. KeyCorp. We broke out of a triangle formation last week. No breakout above prior resistance just yet, but we do have a breakout in RSI. Another one to watch. Volume outstanding. The next chart up is another bank, Goldman Sachs. Now, Goldman had a very strong week last week. It broke out to new highs on the year. We have a great breakout on RSI. It pulled back, validated the breakout. A continuation move higher last week, validating the price. Volume outstanding. Institutional accumulation. Stokes rising. Everything rising. All the indicators. Goldman is going higher. I have no doubt about that. The only thing that could derail the banks, keep in mind, I've spoken a lot about the banks, energy, and pharma, right? The only thing that could derail the banks is a failure of interest rates to proceed higher as anticipated. Now, members, we're going to talk more about interest rates, the economy, the tax bill on the week ahead commentary in Market Wrap. So don't miss that because it matters. It's going to influence how we're going to or what we're going to put on in terms of long trades in the coming week. And in fact, 2018. So more to come on Goldman Sachs, the banks, and the economy. All right, the last chart I'm going to go over is the XAU. That's the gold and silver index. Now, we were bullish on gold in 2016, made a ton. We did very well. In 2017, we've been bullish, not as overly bullish, but we did okay. However, we're seeing stress cracks here. We're very close to either a breakdown or a breakout, one of the two. Now, The RSI, no doubt, we have a cup with handle formation. This is a beautiful setup. Price, though, is a bit of a concern in that while we broke out back here in August, we've had no follow-through since then. The dollar has been weakening, yet gold and silver can't catch a bid. That's a problem. That's a tell. So while we haven't broken back down below this prior support level, and we've been retesting, which is a good thing, at some point in time, it's going to be a sell. And I believe that if we break down below last month's lows, it's going to be a sell for these names. And while I'd like to buy them, I can't just yet. We already have a position in the gold mining names. We may be setting up here a head and shoulder setup. Let's update the chart. I'll be right back. Okay, so what we have here is an inverted head and shoulder setup. And just because I'm making this observation doesn't necessarily mean we're going to get a breakout. But we do have a setup here. Left shoulder, head, right shoulder. We need to break out above, let's call it 90 on the XAU. We need to get through this resistance. I'm confident that if we're able to do that, we're going a lot higher, because that'll probably mean the dollar has made new yearly lows, setting up for a horrible 2018, and that gold and silver should have a strong year end. Now, I'll be frank with you. The month of December is not friendly towards the gold and the gold mining stocks. Traditionally, since 2013 anyway, gold and silver do well in January, not so much in December. So it's going to be difficult for these names to perform well in the month of December. I am concerned about a possible breakdown here, but I'm not ready to close out my position just yet, but I'm certainly not willing to add. So caution flag on the track for the gold and the gold mining names. And that's it for this week, folks. Thanks for stopping by. If you haven't subscribed already, please subscribe to my YouTube channel or follow me on StockTwits or Twitter. Check out my other videos. And everybody have a profitable trading week. Be well.